Well, the big question for everybody, especially for Wall Street, is what happens on September 17th?
So this is, as you know, kind of an interesting month because we've got Jackson Hole and then we've got quite a few weeks of data to kind of pull in. So I'm really, I think everybody's quite interested in some of the maybe the prints that happened in the last couple months and kind of where they go from here. So I'm like everybody. I think there was some fascinating conversations at the last FOMC. As you know, there were a couple of dissents. I think my interpretation of what's happening, especially in the labor market, is that the first couple quarters, a lot of business people were just saying there's uncertainty enough, and I think they kind of cooled a little bit on the higher side. But the most recent couple weeks that we've been talking to businesses in the district, there seems to be a burgeoning optimism again, that they've kind of digested and they've been agile enough to try to work their way through some of the new policies from the administration, and maybe going forward, maybe we'll see a little bit of uptick. That said, I still believe that the inflation number is trending closer to 3 than 2.
Well, we saw that in the minutes that, in general, the Open Market Committee felt that inflation was a bigger danger at this point. Would you say that's your view now?
It would be my view now. I think with an understanding that what may have happened in the first couple quarters on the labor side, which I think concerned several people were on the committee, and me included. But I think this PPI was interesting, that print was interesting, but I really believe that when we talk to a lot of folks in our district, is that if you had to kind of lean or have a bias toward, it would be on the inflation side.
Well, it sounds like what you're saying is the companies may be feeling better about being able to keep employees on the payroll, but they're going to have to raise prices.
I don't know. I think that what's interesting to me, Mike, is I think that businesses learned a lot in that 22-23 cycle with the supply chain disruptions, and I think a lot of them really made new decisions with plan Bs and Cs relative to where their goods come from. And I think they might not have prepared for tariffs, but they might have prepared themselves for other supply shocks. But it seems like they've adapted a lot of their businesses from that experience. So I actually think that the agility that they created from that experience is going to get them through this next few quarters.
Well, then it sounds, again, that maybe you've moved toward the middle in terms of whether you should hold rates or cut rates.
Yeah. You know, it's really fascinating. You know, you think about, and you have great experience in this, when you get to the policy table, when you're talking about it, everything's connected to the dual mandate, right? And when inflation is really ramping up, you have a blunt instrument and you act, which is what we did. Now, as you get closer to the optimum dual mandate numbers, it actually becomes more difficult to make decisions on the margin relative to where that policy rate should go. And so I think that's where you're seeing a lot of the debate now is, you know, where's your lean? Is it do you believe things are too restrictive on the policy rate side or not? I think they're modestly restrictive. I'm still trying to find ways of what's being inhibited in the economy from where our policy rate is today. But I think we're on a good path.
So at this point, it probably would be a mistake for Chairman Powell on Friday to say, definitely we're going to cut, as he did last year.
Yeah. I always can't wait for that speech. I think he keeps it close fast. I wouldn't front run him even if I knew, but I think that we've been doing so much work this year around the framework, around really getting into how we get this soft landing to 2% without breaking anything. So I think he has a lot of different directions to go, and I think it'll be a very anticipated discussion.
Well, speaking of the framework, you're about at that point where he's expected to announce what you're going to do. Is it basically going back to the old framework of we will do whatever is best for the economy at the time? as opposed to leaning towards one side or the other of the mandate?
Yeah, I think I'd say maybe two things on that. I think we learned a ton. I mean, think about the disruptions that were created in that 2020 pandemic cycle, and I think it was very instructive what we did and how we did it through 2020. That said, I think those learnings are going to come out in the framework discussion, and I think the thing I'm very interested in the framework is this whole concept of transmission. I think we can all learn and try to do better relative to how we transmit what we're doing at the table. So one, people understand what we're doing and how we're doing it. And so I'm kind of interested in even how we communicate and transmit the activities and actions of the FOMC.
Well, you're on the inside and you're dealing with this all the time, and I'm reporting on it, so we care about the framework. But I'm wondering how important the framework actually is, in the sense that they adopted a framework in 2020. It didn't work when we get the post-pandemic inflation. And the chairman has already said, well, right after that, we abandoned the framework and we went back to doing what we needed to do at the time.
Yeah.
Does it really matter? We talk about it a lot,
yeah.
But does it really matter?
I think you have to have something that kind of frames around what you're trying to accomplish. I mean, you have 19 people at the table. You're trying to collaborate and trying to have a consensus of some kind. I think there's an expectation of those 19 that we have at least some sense of how we're going to take and do our work best, and then how are we going to transmit and communicate it after we make the decision. So I think it matters because I think there's a consistency it creates, even though you got to have agility as you're doing the work and how you're going to communicate it after you decide. So I really do. I've been there 2 years, and I've been fascinated by it all, and I think we're going to emerge with something that I think is better than what we had.
Well, how do you think you should communicate going forward? Because there are some people who are candidates for to be the next chair who say the Fed talks too much.
Yeah. Wow. Well, you hear both sides of that coin all the time, right? One, do we keep too much to our vest? Two, why aren't we doing more kind of transmitting future crystal ball or how are we interpreting the numbers to a future event? The SEP and the dot plot is maybe some of that, but I don't hear a lot that we don't talk enough or express ourselves enough. I think it's more important where the American public is concerned is they understand, we do a better job on helping them understand what we're doing and why we're doing it. And the dual mandate and the crispness of those two mandates help us a lot in the role we have.
I have to ask you about the latest presidential tweets and the attack on Lisa Cook, Governor Cook. I know that Fed officials will always say we don't let politics come into the boardroom. We do just what we think we should do on the economy. We don't even talk about it. But you've got to be getting sick of this.
No, well, look, I'm a little philosophical about the whole conversation of Fed independence and where our role is in the American economy. We're almost 250 years old as a nation. I think there's something to be said. We were built on words, and we continue to debate those words legislatively and judicially. Whatever friction we might have with other branches of the government, I think great steel's tested by fire. So we can always be better. We can always do this better. But I think the nature of independence and I think, don't believe me, believe other nations that have central banks and don't. It seems to work, but I'm always open for the conversation of how do we make it better.
Well, do you think the Fed has suffered a hit to credibility by the constant attacks from Washington? I think the credibility issue is more in are we fulfilling our responsibility and role around the actions of monetary policy and monetary operations. And I think the work we do on behalf of the American people is very important to their lifestyle and their living. I want to make sure that our reputation stays strong around the things that we're mandated to do by Congress. Other than that, there's a lot of noise outside of that dual mandate. And look,
you take this chair, you do this job, and people are going to have opinions, and I'm fine with that.
Well, what kind of reaction do you get from people around the district these days? Do people bring it up and say, "Are you guys really on the level?"
Yeah, we have those conversations several times a week. They're really the most important conversations. What it helps us do is it creates a real-time experience and expression that I can take to Washington at the FOMC table. But I don't think we can communicate enough about the value proposition of the Federal Reserve. And I think a lot of the things that we do, clearly the monetary policy thing gets a lot of press and it gets a lot of notoriety. It's the monetary operations that we spend most of our time doing, safe and sound banks, making sure payments get made every day around the globe, and making sure that the research that we're doing is a value added to the people we serve in the 10th District.
Well, when you talk to people, do they understand why you're not lowering interest rates?
Actually, it's interesting. So we're going to have two sets of folks that we would talk to. One are going to be business people and finance people that really, they understand it because they have to. I mean, I'm a former banker. You have to risk manage the cycles of rates to run your bank well and profitably. It's the general public that we continue to try to reach to give them some sense of what this dual mandate means to them. And I think there's a little bit of perfection in the healthy friction between full employment and stable prices. And I actually like that friction. And it allows us to kind of balance and rebalance what we're doing on their behalf. And it's 100% on their behalf. If you reach full employment and if you keep prices stable, people can work and thrive. And I think that's an important piece of what the Fed does.
Our last question has to follow up on something we always asked Esther before you took over. Predictions for the Chiefs this year?
Oh, man. They look pretty good. I love the management. I love their focus. I think their coaching is amazing. I also follow the Nebraska Cornhuskers. Hope springs eternal when it comes to football season, Mike. So where the Chiefs and the Huskers are concerned, I'm very hopeful.